I think it is changing. I mean, it is slowly playing by a new set of rules. It's still frustrating. Um, the massive acquisition of silver that we see coming out of China and India cannot be ignored. And why would they bitch about it if they're the ones doing all the accumulation? And they are. And there was some interesting revelations that came out of some interviews that Chris Marcus has done recently, and Vince Lanci, with some mining executives who are talking about the fact that China is buying unrefined silver concentrate from Latin American refiners and miners. This is something that's really rarely, if ever, done, and it is typically only done in times of very acute supply-demand imbalances. It's the way they talk about it, and that they are way overpaying by many, many times the amount that for the each ton of unrefined silver that the West would pay for it, and they're bringing it home to China, refining it there. It has no impact on the price of silver. I think it gives pause in terms of future price, in terms of where we are ultimately going. Yeah, the central banks and the commercial banks, rather, are still in control, but it's becoming very dangerous. And you're seeing the bleed down in all of the exchanges. We've talked about that. You're seeing the import numbers. But you're also seeing something like this, that it isn't very easy to see this, and I certainly appreciate Chris sharing this information with me, but that they're paying as much as $200 a ton more for each load of the material. That's on a per ton basis. That's a lot more. And they are refining it themselves in China, similar to the way that China said they weren't accumulating gold during the last few months, but they were, and they're buying it through proxy banks that work on behalf of the PBOC, who don't report it to the IMF. These countries who are using the suppression of the Western paper market against us, they're not causing a stink, and why would they? But what they are doing is standing for delivery and taking it any way that they can. We saw more of the same. The managed money get fleeced again, and one of these days, it's not going to happen. One of these days, the commercial banks will be on the right side of the trade. Maybe that's where they're going right now, because there's such insatiable demand, physical demand for delivery. To be on the wrong side of that trade at the wrong time is a death sentence. And one of these days, I think they will hoodwink the managed money into going short. And that's kind of what you see right now, where almost $5 billion in long futures were sold by the managed money here last week, and almost $2 billion in silver futures sold. We'll find out more, I think, tomorrow with the COT numbers. It'll probably be much bigger than that. But what you are seeing is what we've always seen. The commercial banks allow the price to rise. They absorb all the buying pressure. They suck in all the speculators, and then they step on the price and lean on it and lean on it and lean on it after they've absorbed all the buying. And they rinse, wash, and repeat, and you end up fleecing the managed money, who capitulates.
In a shocking revelation, Andy Schectman exposes how top global banks, including China's financial titans, are holding the largest concentrated short positions in COMEX history. This strategic move aims to collapse the US economy by suppressing the price of silver. Schectman highlights that China is paying up to $200 more per ton for unrefined silver from Latin America, an unprecedented action indicating severe supply-demand imbalances. Meanwhile, India has imported nearly 700 million ounces of silver in recent years, further intensifying the global demand for physical commodities. These maneuvers by China and India are reshaping the economic landscape, with significant implications for the West. As these nations methodically amass real wealth, the suppression of Western markets becomes glaringly apparent. Schectman emphasizes that the commercial bank's control over the market is becoming increasingly precarious. The managed money is being fleeced, and one day, the commercial banks might be caught on the wrong side of the trade, leading to a financial catastrophe.
But one of these days, when the managed money gives up, goes short, and sells all their longs, that means when they go short and sell their longs, the commercial banks take the other side of both trades, both of the short trade going long and selling their longs to the commercial banks. And that's what will happen. And I don't know when that will be, but I think that what differentiates this time from all the other times is that we're seeing such a massive bleed down. You look at the LBMA numbers, they're down to the lowest level they've ever had since they started keeping records. And it's just a matter of time before the deliveries continue to, I think, create a problem where being naked short the amount that they are is about as foolish as it can get. So, yeah, I understand the frustration. It's still much higher than it was a year ago, but breaking that 30 barrier, I think, was a gut punch to a lot of people. Ultimately, it will retest those numbers again. And ultimately, the West and the rigging banks, where 8 banks right now hold the largest concentrated short position in the history of the COMEX market in any commodity ever traded, a la that chart that Ed Steer showed, which I've got a lot of mileage out of. That speaks volumes that they're still in control. But maybe, just maybe, they're trying to slowly get out of that position, go long and make more money on the upside by hoodwinking the managed money than they ever did on the downside, and with a lot less risk. I mean, price is the biggest tool of misdirection. That's how they're able to misdirect the public, with price and counterintuition. I mean, it's very frustrating. It's very difficult. I think the first thing that people need to understand is that the laws of economics and of Mother Nature will prevail. The suppression of these markets always end poorly, and this is no exception. The world is changing. The world is moving to one that puts more priority in physical commodities in their own possession than they do the currencies that purchase them. And that's what these countries are using against us. When you see India import nearly 700 million ounces of silver in the last few years from the West, and now because of they have a treaty with the United Arab Emirates that allowed them to buy over $1 billion worth of silver this last year, because of the reduction in import duties just with the United Arab Emirates. Well, now we find out that they just cut import taxes totally down to 6% from 15% to stop the black market importing of gold and silver. You have one of the biggest silver purchasers in the world, where it just got a whole lot less expensive for them to buy it. And these are the countries that are draining the exchanges. My mentor, Richard Russell, God rest his soul, always used to say it's the number of ounces that matter. And you try and say those things, but most people would take it as gaslighting or, talking the book or whatever it may be, but it is true. And in the end, it will prevail to be true more than you don't remember what you paid for those ounces. You just keep accumulating them when you can, because it's real wealth. I just think the bottom line is this. What gives me solace is I know that the majority of human population is accumulating commodities. I know that the majority of human population understands that currencies inherently are meant to die, especially those that are fiat. Ultimately, they always die. They return to their intrinsic value of worthlessness, of zero, of paper. And the slow accumulation by these sophisticated commercial central banks, sovereign wealth funds, they understand the long game. Unfortunately, there are a lot of people who don't have the time frame to play the long game. The old saying that the market can stay irrational longer than you can stay solvent is true. You accumulate this stuff because you see the big picture. And as frustrating as it is, you have to understand you're not buying it to become wealthy overnight. You're buying it because it is wealth. And ultimately, Mother Nature wins. You cannot suppress and continue to manipulate a market that is enticing massive global demand. It will end badly. And it's as if I think instant gratification has become so ingrained in the American psyche that it's too difficult to deal with. I don't ever lament when the price goes down, or when the price goes up. I'm not overly joyful. I just understand that over time, gold and silver will do what it's done for all of time, and that is to retain its purchasing power. But in particular, at the end of this macro system that we are in, it will go from 0 to 100 very quickly in terms of its speed. And what seemed like an eternity in being, stuck in a quagmire of confusion and disconnect from reality. Like, why would it not be going higher in this environment? You have to understand you have 8 commercial banks with a tremendous amount of power that are suppressing silver to the degree of the largest concentrated short position in the history of the COMEX. Why? I have my own beliefs. I really do believe it has to do with the amount of silver used in the military industrial complex, that these are very powerful players that don't want to let the price of silver get away, but the rest of the world doesn't care what they want. And when you see India and China doing what they are doing, using the suppression of price to accumulate and continue to drain and to do it methodically, it will reach a point where the realization of being on the wrong side of this trade is a death sentence. And I do believe that. And I think they understand that already. Maybe guys like Elon Musk already understand that. Maybe they're the ones, or he's one of the ones that have been standing for delivery here in the West. I don't know, but what I will say is you just have to put your time horizons on hold and know that over an extended period of time, gold and silver will probably end up being the 2 most important assets, financial assets, that we can own in this country, as the dollar starts to really globally lose favor. And I think that's going to happen in an accelerated fashion at some point.